welcome on board Chakri Lokapriya, Naresh Mirani, Kunal Bothra, and talk about what they are making of the market right now. Kunal, firstly, a word on the Nifty and the kind of, sudden shake-off that you're currently seeing.
Yeah, it's a shake-off of sorts for the indices because again we are seeing a lack of large cap names seeing any kind of a follow-through on the upside, but there is a definite follow-through for the stocks on the downward trend when the stocks have gone through a corrective phase or showing signs of a trend reversal as such for many of these larger cap names. So I think that's adding to the concerns for the index. The bigger concern for the markets today is the sharp correction which you're seeing into the Nifty IT names or the IT stocks. And I think because these are the only two sectors, the Nifty IT and the Bank Nifty, which were holding strong for the last few days. So I think that's one concern for the markets, because if the Nifty IT index sees maybe another round of correction of another 2 to 5%, then we could be expecting that could probably have a stronger effect on the Nifty as well. So, so far looking at the market internals today, expecting that the markets could probably come back to retest the 24,000 mark over the very near term.
Okay, 24,000 might get tested, but Chakri, the word on the street is that it's perhaps that Diwali discounting which is at play when it comes to the stock markets. Are you utilizing that, buying anything at lower levels?
Good afternoon. Happy Diwali to all of you and to all the viewers. I think, IT clearly is one should buy in today's fall because, yesterday's fall in the US was on the fears of a slowdown of Facebook and Microsoft. But why did they said they will slow down? They said that they would spend a lot on IT infrastructure. Now, that is good news for Indian IT companies. And therefore, I think in today's fall, we should go and buy HCL Tech, Emphasis, all those companies which cater to the BFSI industry.
Right, okay. Naresh, hi, afternoon. What's looking like the weakest link in the market? And if we were to test that 24K mark, would it be a broad-based sell-off once again? Or do you think some sectors could manage to actually hold ground?
So if you look at the markets today, the advances and declines are almost 1.7 to 1. The small cap index is actually up half 0.5 to 0.7%. So the breadth is not bad, but if you look at the index, 50-60% of the fall today comes from the IT sector. And we've seen a swing low break for IT. And from June onwards, the leading sector were FMCG, IT, and Pharma. So we've seen FMCG collapse. We are now looking at IT also breaking down. Pharma, the momentum has been reduced in quite a few names. So overall, it's a rotation at play. Earlier, the rotation was on the upside in a lot of cases. Now we are seeing leadership changing on the downside. Banks which were holding on in the last 2 days have also given up. But for now, the view remains same. We are in a consolidation, trying to form a range and a base. So for now, expecting broader markets to continue to do well, purely because they've been showing a lot of relative strength.
Let's see whether that relative strength really plays out or not. But Chakri, I was hoping that yesterday itself we had seen that reaction of the Capgemini, guidance cut, because it had come during the market hours yesterday. In fact, overnight Cognizant came out with its numbers and they had upgraded the guidance. But still, the entire IT pack is in the red right now. What do you make of it? And is this a time to perhaps buy some of the IT names?
When Meta and Microsoft said they will spend on infrastructure spending, so they're going to spend a lot on cloud. So cloud is the thing where all the Indian IT companies are, whether it's Emphasis, HCL Technologies, TCS, name it, they're all there. And so, which means that is actually good news. And now with US elections are going to be out of the way next week, thereafter, I think we should see an acceleration of discretionary order flow. And therefore, it's time definitely to dip into IT because, that segment for Indian IT companies will grow at least 30-40% top line. The cloud computing, that is, and therefore that's not a number to sneeze at.
Okay, so that's the take coming in on IT at the moment. But of course, auto sector is something that will be on the radar as well. The October sales data will be out tomorrow or maybe day after on account of Diwali. Let's see how it really pans out. But Somit will join us shortly to talk to us about what the expectations are. It's a very important month because that will tell you the direction, how the festive sales have really panned out. Somit, what are the brokerages penciling in?
Well, the October auto sales would be important to track given the fact that festive demand will also be partially reflected in this month. But do remember that the entire demand for festive is not coming in the month of October. Some of this will also fall in the month of November. Now, for the October month, if you look at the wholesale sales, they are likely to be mixed. We'll see some growth when it comes to the two-wheeler and the tractor segment, while we are expecting a flat overall performance for the passenger vehicle segment and a decline when it comes to the commercial vehicle segment. Now, festive season, however, on the retail side, the festive season retails are positive for two-wheelers, tractors and passenger vehicles as per various channel checks done by the brokerages. Now, if you look at segment-wise, in the commercial vehicle, Tata Motors is expected to see the biggest decline on a YY basis, around 10% of a decline in the wholesale sales, while for that of Eicher, VECV is expected to remain largely flat, and for Ashok Leyland, a minor decline of around 1% is expected on a YY basis. When it comes to two-wheeler, it's Eicher Motor which is expected to see the biggest jump in its wholesale sales both on a month-on-month and YY basis. On a YY basis, expect to see a 16% growth, followed by TVS Motor which will report a 10% growth. Then there is Hero which could report a 6% growth as per analyst expectation, while for Bajaj Auto is expected to be largely flat, just 1% growth. When it comes to passenger vehicle, it's M&M which is expected to report the highest growth of nearly 9%. Then there are other three passenger vehicle companies like Maruti, Tata Motors and Hyundai which are expected to report a decline on a YY basis. When it comes to the tractor segment, it's Mahindra and Mahindra which could report a 2% growth, while for Escorts a 1% growth is expected. And largely when it comes to the three-wheeler segment, we are expecting a decline from TVS Motor of around 19%, but for Bajaj Auto, analysts are expecting an 8% growth on a YY basis on three-wheeler sales.
Looking at the rates right now, we're down a good 170 points as we speak right now for the Nifty. L&T Cipla still holding out, as is Hero MotoCorp and Dr. Reddy's, but that's not quite the state with the IT pack, or for that matter, some of the banking names as well. They're the ones which are acutely weighing heavy, along with, of course, FMCG as well. But as we get set to welcome the new year, let's take a look at how equities have fared out as an asset class over the years gone by, how commodities in various sectors as well have been. We've got Ansh joining in right now to throw some more light on that. Ansh?
Well, it's been a gainful somewhat for with significant gains for indices and specific stocks. Let's break it down. Starting with broader indices, we are seeing that Nifty has climbed over 24%, but mid-cap and small-cap are the one who have stole the show. They have given a move of more than 30%. Now, if we talk about sector indices, then Nifty Pharma, Nifty Realty, Nifty Auto and Nifty Energy is in top gear, surging by more than 40%. Rest of the indices have also given a positive move. Actually, all sector indices have closed in green till this somewhat. Now, if we talk about individual stocks, then top gainers for Nifty are Trent, BEL, Bajaj Auto, M&M and Bharti Airtel, each giving an up move of more than 70%, with Trent giving an up move of almost 190%. Now, if we talk about losers, then here we are saying that IndusInd Bank, Bajaj Finance, Nestle, Asian Paints and Kotak Bank are the top losers in Nifty. Apart from IndusInd Bank, we are seeing that all other stocks have given only single-digit down move. Now, taking a quick glance at alternate assets, Bitcoin has given an up move of more than 80%, gold has surged by more than 40%, whereas copper has given an up move of 20%. Only crude has taken a hit by more than 5% on downside. Now, if we talk about global indices, then Nifty has not topped the global indices, but it's definitely in top 3 index. So overall, it has been very gainful and positive somewhat.
Very gainful and positive indeed, and here's hoping the next samvat is as gainful too. But Chakri, let's talk about one of the big movers from last year, and that was Trent. Do you expect that kind of performance to continue for retail majors like Trent and consumption plays on urban India?
Companies like Trent and Titan will continue on their path. The only thing is their valuations, you need to catch up. So which means we can expect the stocks to pause a bit until they catch their breath and evaluations catch up. But in terms of, their business momentum remains strong. Gold as an asset class for purchase.
There's a bit of a connection issue there. We'll try and reconnect the line, but the theme seems to be that the retail stocks, at least the ones focusing on urban India, are likely to do well because that's a structural story which is at play at the moment. But talking about L&T, that stock continues to gain ground, 7% higher for that one. In fact, let's hear out what the management had to tell in their con call, because they were quite positive and optimistic about the growth outlook and the order inflows as well.
So we did anticipate a 3 to 6 months moderation in terms of the momentum. And true to our expectation, it did play out that way. And hence, the order intake from the domestic market for the half year is roughly about 1/3 of the total order intake that we are reporting for Q2. The orders that the company won during Q2 is about 800 billion rupees. Looking ahead, we see a fairly healthy prospect in terms of pipeline between now and March of 25. We expect the domestic orders, which so far in H1 have remained flat, to pick up momentum. But going forward, we expect carbon light solutions as well as green energy to pick up pace. So the skew towards hydrocarbon projects will get somewhat moderated.
Okay, so that's the take coming in on L&T at the moment, but just taking a look at what are the other big buzzers, like of course Cipla tops the chart, you have Rainbow Children's doing well, Jubilant Life, DOMS Industries, these are some of the names on the gaining side, while on the losing side, it is about 5-star, which is down 8%, Aditya Birla Capital is coming under pressure, and of course the IT pack. Kunal, you've been quite positive on AB Capital, the slide of 6%, are you surprised, and what happens to the long-term trends then?
Yeah, the longer term charts are still positive and intact for AB Capital. Today's move, I think, is just about a counter reaction to what happened yesterday in the last half an hour, 1 hour, when the stock moved up higher by a margin of 6%, I think 6 or 7% yesterday, when it moved from 202, 205 levels to almost 215 to 16 plus mark. So I think it's now come back to that starting point of 202, 205 range for AB Capital. Now, the longer term charts are intact and positive. The longer term support for the stock is closer to 180, 85 levels, which means that in case if the stock retests the levels of 185, that could be a very good opportunity to try and chip in further.
Okay, let's pick up on the two buzzers then. L&T, of course, is seeing an earnings reaction. The street has liked the commentary from the management on the order inflow and, of course, the visibility going forward. And the other one, of course, has been Cipla, which has also shot up from the word go today after the US FDA classified their Goa manufacturing facility as a VAI, and the brokerages have already upped the EPS estimates by about almost 4%. Chakri, let's get in a chart check on both L&T. Okay. Naresh, let's get in a chart check on both L&T as well as Cipla.
So L&T is interesting. The stock tested the support levels of 3,200, 3,300, which was the price point on the day of elections, plus a couple of times before in February and May. And we bounced back from those levels. The recent swing highs are at 3,600, which has also crossed. So ideally, we go back and test 3,850 levels, which has been a resistance. So that would complete the range bound move, which it is going through. It's beyond 3,850 where it gets into a newer trend. Cipla, on the other hand, has corrected from 1650, 1700 all the way down to 1400. And now again on bounce back towards 1600 would continue to be a major resistance going forward.
Point taken. Chakri, we lost you there. You were talking about Trend, Titan being the urban consumption plays. What about them?
Yeah. Sorry about that. And now going back to Titan, both of them and Trend continue to remain very strong plays. An RBI rate cut will clearly help. That's the next step of growth, that acceleration in growth we'll see, because it's inevitable whether in the next month or two we have one. And the companies are well placed. Their business momentum is in place.
Okay, the companies are well placed. The business momentum looks on the upside. That's a take coming in on some of these counters at the moment. Piramal Pharma has also actually managed to do quite well. What's your view, Chakri, on Pharma as a whole? Of course, Cipla got that overhang away with the Goa getting VAI, and then even others like Piramal Pharma and many other names have reported good set of numbers.
Like we saw today with Cipla, it's because of they got that approval for their Goa facility, and the stock is up about 10% because expectations have moved earlier from 26, 27 to 25. So I think that's pretty much the name of the game. So Cipla is still well positioned because they will get that nearly 10% uptick in earnings because of the new launch, and their existing one other product will also do well. But so that is the name of the game. So it's not a sectoral thing. I think Cipla still looks okay. Piramal probably has done its bit.
Chakri, I just wanted to kind of take a follow-up on Pharma because many of these names, and let's pull up the 12-month chart, they are up anywhere between 40 to 50%, whether it's, Piramal Pharma, Biocon, even the smaller ones at that. Which names would you still recommend as buy despite the up move?
Yeah, we don't want to begin with as a sector. We are not too hot and heavy on this particular sector. It's still a very stock-specific approach. Maybe Piramal, more than Piramal, it is Cipla. It has various overhangs, including this FDA approval. And that would probably add about 10% to EPS. Even after today's run, I think the stock has probably another 15% upside over the next 12 months. Outside of that, Mankind Pharma from a consumer perspective, consumer uptick perspective still looks okay. So it's more selective. We're not really big on pharma.
Not so big on Pharma, but Chakri, great to have you on the show and wish you and your entire team a very happy Diwali from us.
Thank you and have a nice Diwali.
If you like this video, then like, share and subscribe to ET Now.